The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this really sunny day, 23rd of June. And pleasure to be here Monday through Friday, 11 o'clock till noon. And of course, you had fabulous shows coming up after mine, Think or Swim. What's today? Thursday. We go all the way through. Andy Hecht will wrap it up. And we are looking at a market that's up 160 points in the Dow at 17,940. You've got the S&P up 18 at 2103. You've got the comp index up 50 at 4883. You've got gold down only $5 at 1265, holding pretty well. Silver's down 7 cents at 1730. Platinum is down 11 at 964. High-grade copper is up 215 at 215.70. Interesting. Crude oil is up just 17 cents at 49.32. You've got bonds down 13.30 seconds at 130 and 29.30 seconds. Whoops, that's the TYU. The USO that is down $1, just over $1 at 166 and 20.30 seconds. And you've got the dollar is down 18 cents at 93.50. What's really important about what we're looking at this particular point is within the context of the 10-minute chart. I'd drawn this in as we were coming up to the show that was started at about 11 o'clock. I went online immediately, showed in the den that there was a left side, right side price time match that said that by 12:10, I believe it is, 10 minutes past 12 Eastern time, we should be testing the high of 2097.25. In fact, we've gone to leg B. We went right to 2096.50. And so there are a couple of things that are going on here. So let me just give the parameters a break above. I don't think we're going all that much higher at this particular point. We could go quite a bit lower because there's that whole aspect of nervousness that should creep into the Brexit. It's only 2%, and that's the poll. That wasn't even the real results. It's raining. It's all sorts of things that are happening. We have no idea what the final result will be because we don't have the kind of evidence that we even get wrong here with all the polling and everything that goes on. You know, my attitude has always been a great deal of the time, a lot of folks don't actually give out their real information. They try to avoid it or they obfuscate. So we'll see, because this is a very important vote in terms of the Brits. But most importantly, and now let me just do this. I'm going to take this chart, 10-minute chart, give you the parameters. Intraday, I think we can try to test the high between 20. I don't see us going to 2102 unless something spectacular happens. At least not during the intraday today, because 4 o'clock we close. That's only 10 o'clock at night, I believe. Their time is still going to go to past midnight. Now, this is going to be very interesting. My thinking is that we're going to suddenly have some kind of a bad news event during the day, and there should be a slide. If the E-minis trading at 20.95 up 18 take a dive, but they actually bounce back and go into this up channel. Let me just get this down. That's the newest thing. It's so persistent. You get calls. This is from Elburn, Illinois. I don't know anybody in Elburn, Illinois. I'm not answering the phone. Why they bother even is just beyond me. It's just a damn nuisance. Got that out of my good rant. Okay. Now, if we pull back and then climb back into this up channel, that's still not really enough evidence as far as I'm concerned. So let me talk about what I consider to be evidence. Evidence, and the reason why we were long the Dow yesterday, a number of positions, we got taken out. I wanted to keep the stop much, much wider. And then I thought, you know what? If the Dow closes at its low, and then for whatever reason, there's a very negative report this morning or a consensus about the polls, we could be vulnerable to a gap down very big. I would prefer to have the safety of action during the day. That's number one. Number two is what we did is we reestablished positions. Fortunately, they're up at this particular point, but big deal. That's not the issue. The issue is I wanted to do this based on a technical picture. And the evidence for me was that if there was a very sharp push in the weekly chart, I'm going to the E-mini, this is the E-mini September contract. Look how close we got to breaking above 2010.75, that huge move that took us to leg B. And for a consolidation to be within today's high of 2102, in the 2102s, we got within 8 points, 9 points, let's say. Let's call it even 10 points, 5%. We got within 10 points of going to a new recovery high. That is incredible action. Now, the day is young, and it means that overnight anything can happen. We could have a huge rug pull come in the morning, and who the heck knows what's going on. But the futures are down. The S&P's down 35 35 points. The Dow is down 380. I can't remember what the where they stop, where you've reached your limit. I don't know anymore. But the fact is that could happen. It really could happen, because if the vote goes the wrong way for the market, then the market becomes vulnerable. I'm just saying on a purely technical level, I wanted to be long. And when I did tell my subscribers to my opening call, we've got some nice positions that are actually acting quite well. Our one short is even now down, which is what you want for a short. But the most important thing is what we're looking at here is opportunity on a technical basis. The 120-minute chart of the E-mini went to a peak D, and you expected a peak D, just as you did there, 2092.50, where I drew the Elliott wave. There's no Elliott wave here that I could figure in as not a complex. I like it very clean. So this is 1, 2, 3, 4. Oops, sorry. Yeah, 1, 2, 3, 4. We've gone to a 5, but it's not the way I like to do it. I'm basing it on the Chapman wave methodology. And what I'm looking at here is strong action. And even the big pullback that we had, going from 175 in the Dow down to 125, and now we're back at 165, says to me that we're looking at the internals of the market, of our market, starting to improve. That's really, to me, the most important thing, number one. Number two is, on a purely technical basis, because we've gone to an A G/C in the daily E-mini. If we break above 2110.75, I can give this an alternate count, but the technicals at that point should be improving in the daily. But the weekly chart, those technicals are really strong. That's really what I'm looking at. So, okay, enough with that. I just wanted to say that for my subscribers, I will be giving that update at 12:15. Probably not going to do very much. I'm not sure yet. But most importantly, what I'm going to say to you is, if you have the instruments that we've discussed, all of them are tradable after. No, at least 2 of the 3 are tradable after hours. You might want to exit one of them that's not tradable after hours, because you're still in a very good position. I'll talk about that when for my subscribers at 12:15. I'll be back.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and US dollar denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Dow's up 178, S&P's up 20, and we are looking at something very unusual here. The market seems to be believing what's going on. But most importantly, let me just show you here. The market broke this, the E-mini 10-minute broke this 10-minute left side, right side price time match in a quicker time frame, which says that instead of pulling back, if it does pull back, it has to hold this trend line right here, which is at 2095. We're at 2097.50. Most importantly, this is the area, the very next area of resistance, and I'll even draw this in. I don't believe we can do it, but I'll draw it in. And if you're long, you can just stay long. Just raise your stop. I mean, you don't have to get carried away here. That's all you have to do. Look at this. This says, based on this methodology, if there's going to be a sustained move to the upside, I'm going to go to other aspects that are really important right now. Going to go to the volatility index, etc. We'll look at that. And that says a retest of the high of 2102, the round number high that was made this morning. I meant to make that red. There it is in red. A retest would come in by about 10 past 2 this afternoon. By then I'm sure some rumor will have to come in to knock the market down a little bit. But boy, this is really good action. But that isn't really the point of this whole exercise that I'm going through right now. Let me show you what I'm really looking at. If you look at the volatility index, remember that move that went to 22.89? Where is it? Right there. 22.89 in the daily. And then I say to you, be a little careful. Peak C's have a way of failing. Very often we did go to a D, and that was a crazy move to the upside last August. But that was just an unusual thing. And to this day, my contention is that was an aberration. I don't know what pushed it that high to 53.29. The Dow should have been at about 14,000 or 13,900 at 52. 53.29. So this is this is the next one was a little less than half at 32.09. That was at peak C in January. China Global Federal Reserve rate fears, same sort of thing over and over again. This is the weekly VIX. And now we've gone to a peak C. And that says that by tomorrow, Friday, if the volatility index closes below 16.33, the 9-period moving average, that'll be below the 200-period moving averages at about 16.90, and we're at 17.92, down 325. That's 15% decline. That's going to tell us that this the MACD did cross positive, but it isn't very strong. The stochastic had a very nice move up. It didn't get over 80%. It's at 44%. If it closes below, it suggests to me that this was a peak E. I can't put a down arrow yet because we need to close today, maybe even tomorrow, underneath the 9-period moving average. Stochastic says you could, but the MACD says not yet. So I've got a plus, a red plus sign there. And that's suggesting to me that the volatility index, it'll have to be really bad news, and that'll be Europe. I mean, that'll be the Brits. Yeah, that's all I can say. If that occurs, then what we're looking at is the VIX suddenly spirals back. By tomorrow at this time, the markets will be down huge and the VIX will be back up in the 20s. I just don't think that's going to happen. But thinking and doing are two different things. So for subscribers, the positions that we have, as I say, they're actually up very nicely right now. I'm gonna tell you where to put the new stops. And if you are afraid, you can just take your profit. If at 12.15 we're still up, I'm going to say don't. You can always come back in because the trend will be set. If this is the case, if we're going to break to new recovery highs, that would suggest to me on the upside that there's room to go, that this summer we will go to all-time highs. So this is a very important period for me. And as I said, it's unusual. I'll just run these again, Dow, INDU. It's unusual to have such a high level, a fabulous high level consolidation like this, closing almost every week close to or above the 9-period moving average after making a significant top, and that was right there at 18,167. That was a 17.5% gain at, let me just double check, that was the week of the 22nd of April. So far, I like what I see, and we are participating. I did not want to be a non-participant. I don't think you're going to have it. Let's just imagine for a moment a best case scenario. I've given you the worst case scenario. Let's say a best case scenario is that the market actually closes, the Dow closes about 135 points higher, gives back 40, 50 points. Okay, it closes at least triple digit up, and the S&P closes above, I would like to see it above 15, a plus 15 at the close today. If that's the case, and then the market over the period of the evening starts to get a good feeling for the Brexit result. Now, this is not political. It's got nothing. I couldn't really care. It's their business, whether they say they go, something else. They could. Tomorrow morning, I'm going to talk politics. The politics of politics, not politics, but the politics of someone remind me, I want to show a chart of handgun sales. Okay. All right. Here we are. We're looking at 17,956 and they're up 176. It started a gray leg A in the Chapman wave methodology. And that's the only reason why I wanted to get back to the long side, actually wanted to increase the long side, because chart-wise, there is enough evidence to say that we are going to try for a leg D. If there isn't some kind of an aberration, some kind of a rug pull over the next couple of days, we should look for 18,168 to start leg D in the weekly chart. The moment it does, look what it does. It starts gray leg C in the monthly, but because the top was a peak G, you can't go to an H. Now, we haven't broken below the most important low. I haven't spent time discussing this. I will maybe over the weekend if I get a chance. We have guests, so I'm hoping to do as many charts as possible. The 15,340 low back in February of 2014, that wasn't taken out. So theoretically, I could give this a new wave count and call this ABC, and the next high is a D. This is too much water over the dam. This is all new. Everything here from the 15,370 low on August the 24th of last year, to me, this is all fresh. This is new stuff. Now, I want to talk about, I'm going to write it down as well. So that's going to be gun sales. I'm going to talk about, I just thought of it. Now I just forgot about it. I wanted to talk, if I don't write these things down immediately. I remember when I used to do cartooning. I'd be in the shower and I'd think of a cartoon. I'd say, that's fantastic. By the time I got out the shower, if I hadn't written it on soap or somewhere, it was gone and never came back. It's not like it reappeared again. So I lost that thought, gone. I'll have to think of it again, but it was really important about tomorrow. Isolationism. Isolationism. Okay. Good. I've got my stuff set for tomorrow. Now let's get on with our story. And our story says that the S&P. Now let me go to the New York Stock Exchange. Remember how much time I took about talking about the New York Stock Exchange over the weekend, last weekend? I gave all these charts. Look, here it is. I hope I can find it. Right there. I think this is it. Hopefully, here goes. Yep, there it is. I discussed this chart, and I said back at the high of in 2000 in September, the New York Stock Exchange made an all-time high of 71.64, and then the technicals were failing, and the market plunged, and it went to a trough F, started a brand new move to the high of 2007 in October, 10,387. We'll talk about that when we get back. Basil Chapman, Dow's up 176, S&P's up 20. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Editions. Now we're looking at the New York Stock Exchange chart. Now look what this is number 2. So the high in October of 2007 plunged, but look what happened at trough B in 2001. It popped up to an A- and then went right back under the red moving average and under the thick green line, which is the 20-period exponential moving average. Look what happened back in, this was January of 2008. You went to a trough B, ran up to an A-, plunged underneath the 9-period, the red and the green, and it went all the way down to a trough D, down, way down at 41.81. That was that March low. And then you ran up to a peak D, pulled back to a B, and you went all the way up to the most recent 3 peak Ds we had, and the top was at 11,254. That's the third one on the 20th of May of 2000, the week of in May of 2015. And then what happened? You went down trough A, trough B, had a rally, went to a peak A, and then you just pull back mildly. But this time, the 20-period moving average was above, and the price was above both the 20 and the 9-period moving average. That was a big difference. That's what I spent time on over the weekend, sending out all those charts. I discussed it here in the den on Monday. And I said, uh-oh, with a question mark, because there's a big difference. The stochastic didn't go down nearly as far. It also made a little W formation and ran back up quite sharply. The MACD flattened out, and the histogram started to make higher highs, and now it's making higher lows as well. So there is a difference. I'm not used to this chart because it's got black and gray for the candles, with black being the upside. Usually for me, black, like if I go to the 120-minute chart, black is usually, this one here, the daily, which I show my subscribers every day, leg B. We're just about to bump into resistance in the Dow. Just wanted to show this as an example. And look at this. We went to leg C. It was a little later than I anticipated, but there's your leg C in the 120-minute chart. So this is with green and red. This is with white and black. I actually like the green and red because green is up and red is down. Just makes it real simple. Let's go back to our chart right here. And what we're looking at is this, although I keep looking to see that we're trading at the low. No, we're trading at the high. We've made a leg B. This is important. New York Stock Exchange has a long way to go to the 11,254 level. It's 600 and something points. So all I'm saying is that I like the action. It's another reason why I wanted to go long, take the opportunity. I said we got stopped out, but we could get back in so close. It's really unusual to have this kind of action and not take the opportunity. We took the opportunity, and we'll see how it plays out. I could be totally wrong, but I am looking at it, and I'm saying, look at that weekly chart of the New York Stock Exchange. That's really good action. Big improvement in the monthly, nothing big there. But the daily and the weekly are showing very good signs. Let's go to the IYW. IYW, what the heck? So I just pressed that by mistake. US Technology. I could go to XLK there. I didn't mean to be there. I wanted IWM. IWM is the Russell 2000. And that Russell 2000 was lagging. Now it's suddenly started to go to a B. But the monthly chart is very much like the New York. So the New York Stock Exchange and the IWM, the Russell 2000 iShares, lagging. My favorite indicator at this particular point is the Dow. It's the best balanced. I've seen it in 30 years. I don't study it that closely, but I study it closely enough to say in my memory, I don't want to go back and even check it out. I'm just saying my memory says this is really nice action. And that's all I can say. So now a couple of questions. I was asked about, and I'm a little embarrassed about this because I listened to Andy's, I've got his webinar and all that, but I'm just blanking out right now. Basil, sorry, I don't have a symbol. I hear talk about the gasoline crack spread, but I would like to see a chart. Let me just do this for the chart, and for some reason I should have the numbers. Wait, who usually Julie sends me Z. Let's go to ZB. ZBQ, I think I'm just doing this by memory. Let's see. Memory. ZB. I'm not going to waste time. I'm going to the USO just for now. USO is, in fact, the United States Oil Fund, and it's trading okay. As I said before, I think that the $12.31 level that it just pierced recently for peak F, I now do have to put a down arrow here. I think this is a bounce, and wouldn't be surprised if we're a little bit separated now between crude oil. I think the market is moving on its own velocity. That's really important. So I can see a trading band. I'm just going to make it real simple. And let me just see. Yeah, I'm just going to make it simple. I think that crude is, I'll go to the crude contract now because CL is a little bit more detailed. CL is at 49.54. At 49.54, I can just tell you that you've made your peak D in the weekly. I'm going to circle this. In fact, I probably should put a rectangle, but I'm going to favor the pattern that says circle is what you want to look at. and it says that we should be in a trading range in crude oil for a little bit longer, and that if there's a decisive break above 53.25, that's another 3.5, 4 points from here. That says crude oil could try to test the candle of the 6th of November, the week of the 6th of November of 57.79. I don't think so. I think it's just stuck in this range for now. And if you look at the 5-minute chart of the USO, look, the SPY, the green line, has spiraled to the upside, whereas the red is pulling back, and that is the USO crude oil. So I'm not answering your question. I'm just giving you parameters, and I'm answering it in my way. And I'm saying to you, this fulcrum starting right from here, oh, this is a very important pattern. This is that triangle pattern. This is the diamond pattern, potential diamond pattern. Whoa, look at that. All right, nothing to talk about now. I'll talk about it more tomorrow. All I can say is that if crude oil does pop above 51.35, that's going to say, okay, test of the high of 52s is going to be in place. If it falls and it takes yesterday's low of 48.40 out, you've got an H formation, and that's going to make the support at 47.80 very important. Hope that helps you. Now, let's get to the nitty-gritty. The nitty-gritty says, how is the XLF? I had a question about Goldman Sachs, the XLF, and JP Morgan. Well, this is a very strong move in the XLF. It's a 23.22. Look what's happened. You've got yourself a beautiful Chapman wave right there. We haven't tested it yet. Falling axe formation. That's an expanding, declining cone. And it says if the XLF is able to, it has to close. This is one of those not to pierce and pull back, but it's got to close above 23.35. Well, 23.45. I want to give it room. I want it to clear that and hold above. That will suggest that the weekly chart finally could go for that leg D above the high that was made the week of the 3rd of June at 23.93. This is a really important phase for the XLF for many reasons, but the most important reason is right here, the monthly chart. You can see that it needs to get to 24 on a closing basis. This is a monthly chart. It needs to close well into the high 24s, preferably 25.50 by the last day of June. That'll be fabulous, fabulous action. Yeah, so I think we've covered a bunch of things. Guys up 181, S&P's up 21. Here's that 10-minute chart again. And there it is, leg B. Should pull back a little bit here.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, we're back, and I didn't finish my answer to the question on the XLF and Goldman, JP Morgan. Sorry, I meant to do that. Goldman looks like it's moving very nicely up, 386 at 152. If you're looking, and JP Morgan right now is, JP Morgan, type it in that little square there, that rectangle, JP Morgan. If you're looking at JP Morgan, it's a better looking chart, but it's not quite as strong on the day. So I'm going to suggest, because it's the first opportunity that I've seen in a long time, that Goldman Sachs, maybe it's like DB, which is Deutsche Bank, which finally got a real lift off. It's acting very well, up 4.83% today. Finally, 3 gaps, two huge gaps, and then, just everything's a gap. Yeah, it could pull back, but Deutsche Bank finally has got a little bit of lift. I don't think that's going to last all that long, but we'll see. Most importantly, I'm looking at the American banks, and JP Morgan is right there. But I'm going to suggest Goldman Sachs is double the price. But I think it has the potential to go from the 152 to the 166 200-period exponential moving average if this rally can last into Monday or Tuesday. So that's the way I'm looking at it right now. So that's that. The next question was WLL. You know, I saw WLL Whiting go by the ticker last night. I kept saying, wow, I haven't looked at that in ages. I looked at the monthly, it didn't look too great. And a gap down today. Be careful. I don't know why you're looking at a short. Yeah, maybe this is a short because it's made a leg D, a peak D in the weekly. So Whiting WLL trading at 11.02, down $1.08, down almost 9%. I wouldn't even short it. It's not looking good. So the question would be, what is the question? Whiting Petroleum. Oh, Exxon and wave count on Exxon. Now that's different, completely different. You're going from an $11 stock to a ExxonMobil, trading at 91.59. This is A, this is B, this is, I think it's C. My says it's a C. Let me just double check. 91.59, 91.59. Oh, parallel. So this is still C right now. Yeah, I'm going to say to you that ExxonMobil is I think it's a little choppy right now. I would not be buying. There are other things that I would buy. I would not be buying, even for a dividend right now. I think the dividend plays, maybe they're all, we have a dividend play that's up about 21% or so, but that's in a different category. This category now, I think, might have run its course. So I'm saying, this is not the favorable category. I'd rather be looking at maybe the financials as an opportunity, just based on the Chapman wave. Leg B can fail, but this is the best risk to reward. That's what I'm saying. And then Bob asked about POT, P-O-T, Potash Core, Saskatchewan, potash and other materials. Very strong move today at 17.65, up $1.13. And I'm going to suggest to you that, yeah, it's in play. If it responds like this, if tomorrow there's another day and has a good move, it'll tackle that high that was made at 18.46. I like it. I think if you're in it, congratulations. What was the other one you got there? Potash and Mosaic. Mosaic, MOS. Right. Mosaic. Well, nice move as well, up $1.46. In a way, potash, remember I said earlier that potash was looking better than Mosaic. Now I think Mosaic has got a little bit of an edge. I think it's a little steadier chart. I prefer it. It's a 28.18 up $1.44. I think on a shorter term basis, they're both going to bump into resistance soon, but Mosaic could go to the 29.50 to 30.50. I'm not sure it'll get to 31.10, the high that was made in early March. But yeah, it's looking good short term. So I hope I covered a whole bunch of those questions. Yes. Now this is what I wanted to do. Question in the den, why isn't it leg C? Because it is leg C. A gator? I mean, come on, what does it say? It says A, B, C. No, I missed one. I was doing it so quickly because I was trying to get the left side, right side price time match. You're absolutely correct. It is a leg C. And I'm not going to, and because it's touching the breakout point, immediately what I do in trading is I grab this and I put it in an arch formation and say, just be careful. There's a chance that it could pull back. Now is where I'd like to be looking at the MACD and the stochastic. Good eye. You always have a good eye, Gate. And I commend you for that. I just did it really quickly and I skipped that little peak. Your only obligation in the Chapman wave is to get the peaks, and I missed that. Still, peak B or peak C is better than making a mistake at peak D. All right. Let's get back to our story. So I'm just going to refresh this for a moment, and then I'm going to do this. Okay. There are a couple of things that are going on here that are very important. And the question came about with the potash and the Mosaic one is my TRCCI. What about the commodity index? Well, as a commodity index, it's kind of stalled here. It's in a peak E in the weekly. I think that it's going to take a little breather. So some of the commodities could do well, but the actual index, I think, is saying that in the mix. Let me show you what I mean. I'm going to go to wheat, the continuous contract of wheat. It's got an Eiffel Tower. It made a peak E in the Chapman wave, and it's plunged, and that is almost like a peak C minus in the weekly chart. That is really not a good pattern. I do not like this pattern at all. Look at WC. Let me look at the C, corn. Corn is at this point made a peak D in the weekly. It looks a lot like the commodity index. Made a peak D in the daily. Monthly chart is a very strong leg B to the upside. Nothing wrong with the chart. I just think it needs a little bit of a rest. 1138. I would not be surprised if soy trading at 1138 and 3/4, 11.8 and a quarter. Up 3/4. I wouldn't be surprised if it pulls back and it trades between 158 and 1100 to 1198 is a 9-period exponential moving average. I just wouldn't be surprised if it pulls back. It should. It's had a spectacular move. Look at HG. This is high-grade copper, different area completely. This is showing strength. This is yesterday I said it's acting quite well, but I didn't know how far it could go. Well, you know what? We might be looking at a tidal change. I have to actually put an up arrow now in the copper, which is at 2.1665, up 0.031. It's in leg C, strong leg C. The day's young, but there's still a strong leg C, and the weekly chart is improving. That's all I can say. So I'm going to say that there's a good chance that within the context of all the things that I'm looking at, and I'm including the VIX index, that maybe last week we did see some kind of a high in the VIX index, and that we're going to see, regardless of what happens now, I can't say regardless of what happens in Britain, let's face it, if they vote to exit, I think it's going to have at least shorter term repercussions. So that's why when I've got to keep saying that I'm going to do my update at 12:15. My mind is, I hardly ever do these lately. I have done them, and it's so confusing to me because I usually sign off after 12. I'm already back in my own stuff. So let's do this. The volatility index is trading at 1785. By the time we close our show today, we'll see where it is, because what's going to happen, I'm going to show you something very interesting. There goes that beeper that I always forget to fix. I've already had the radio come on in the wrong station. Yeah, this is what we're looking at. In the volatility index, VIX.X, daily, you see the pattern where you gapped out. First of all, let me show you something. What's the objective in the Chapman wave? To take you to at least a D. What do we have in the volatility index 10-minute chart? We have A, we have B, we have, nope, that's not C. There's C and there's D. I mean, when I discovered this back in the late, in the 1980s, it just blew my mind that you could get so many Ds of importance. I'll be back straight after this.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. Don't forget, fabulous show coming up. Options out. So the Eiffel Tower plunge. This is the VIX index. It screams in a peak A, B, C. What are we looking for? We're looking for a D. It goes to the D right there, 2122 on the 22nd of June. Plunges down in the Eiffel Tower plunge. And it's like a capital A, uppercase A, straight up, straight down, straight up, straight down. Now it's testing the base. And what is the base? 1783. It's already gone below it. It's gone to 1768. Watch this closely. By the end of the day, if the VIX suddenly rallies and it goes to the 1850s, 1820s or higher, then I'm going to say the market will probably give back. At least Dow will give back 45 to 60 points, and the S&P could pull back about 7 or 8 points. And if, in fact, this goes down towards the 1750 or lower level, this market will close at the day's high. That will be tough. Imagine closing at the high, and then there's, well, I would prefer that it closes at the high, and then there's bad news, because then we've got a decent cushion. I don't want to close at the low of the day and then gap down tomorrow. All right. So the story is junk and HYG. I was asked about HYG. This is the Spider Barclays High Yield Bond ETF. Junk JNK trading at 35.57, up 20. It looks like it wants to make a leg D above 35.65. That'll be at 35.67. It goes to D in the daily, D in the weekly. We've seen that in so many charts. And this is leg B in the monthly. Monthly doesn't look that great, but the weekly is actually looking pretty good. And the HYG is the same situation. So a couple of questions. Oh, man, I got those questions right now. Yes. Chris, the same thing. I got some really good Chapman waivers out there. Correct me whenever I'm wrong. Yes, I just corrected that, Chris. Absolutely, it was a leg C in the 10-minute chart. Oh, X. U.S. Steel, MT, chart analysis. Let me just do this. SLX, which is the steel ETF. Market vectors is trading at 27.80. It looks quite good. It's got a peak A, peak B. This is going to be a leg C if it's able today, especially to go above 27.87. If it does that, we could get an overlapping wave here, which will be a very strong move. Meantime, weekly charts is it's just a retracement failure mode. Don't get too carried away. But if it does close in the 28.50s on any day next week, it really improves the weekly chart, and the monthly suddenly picks up and says, hey, don't forget about me. So yes, a break under 26.50, let's call it $1 lower. $1 lower, now 26.50. A close under 26.50 says, whoops, stalling out again for the steel. Now we've got just a moment to go before we wrap up. Let me just do this one more time, because let me tell you, the day is very young. VIX.X, deal with the VIX, 1783. My thinking is that towards we get later in the day, we'd normally expect some kind of a pullback. So if there is a market pullback, watch the VIX. That 1865 level will be really important to close above it. We'll probably close quite a bit lower by the end of the day. But if we hold steady and there's just this wave after wave of buying, watch the VIX, because if it starts to go under $17 tomorrow, if there's good news for the market, VIX could slide into the 16s and 15s very quickly as the market goes higher. So I will be doing an update at 12:15. I had to say that to remind myself. Stay tuned, folks. I'll be back later in the day with Tom O'Brien. Boy, when I get back at 4:20, that'll be in the afternoon session. When it's all done, that'll be interesting. Thank you so much for being here. Have a great day. Otherwise, I'll see you tomorrow if you aren't there for Tom's interview. Well, music hasn't started yet. Am I beating... Al, do I get an award for beating it? No. There it is. Dabbity, 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 dabbity. I heard this music just the other day. I'd never heard it before in outside the show. All right. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.